Good morning. Put this in context for us. We talk about multi-year order books and backlogs and cash flow when it comes to Boeing. How significant is this move?
Not so significant. Boeing basically announced the delay from 2021 to 2023 in their 10K. So this isn't surprising that this is going to take long. If the 777X is certified in 2023, it would be 10 years from launch date to certification entry into service, which would be the longest. The average is around 8.5 years. Of course, the MAX adds to these delays and the scrutiny that the FAA will look to. Part of the benefit for Boeing is the wide body market is still pretty depressed. International travel is down 70% last month. So they are benefiting from the fact that the market hasn't picked up internationally yet. So it's not like the 777 order book is very robust.
We do see, Boeing, pulling back a little bit, 3%. It's obviously a pretty headline-sensitive stock, given the fact that we're still waiting for this full recovery. But what are the other key swing factors here for Boeing? I know you've taken a look, of course, at China's posture on the MAX. And what are we waiting for to solidify people's expectations that things are back to going right for Boeing?
I don't even know where I start. There's so many things we're waiting on, right? The MAX is finally getting its shipments back together, but we're averaging 10 to 14 a month. That rate should be closer to 22, 30 by the end of next year. So there's that catalyst. The 787 is just re-entering deliveries again. The 777X is fractured by FAA delays. So we're waiting on a number of items. You mentioned China. Of course, China is very important to both the MAX and the 787. It comprises 20% of the historical deliveries, 20% of the order book. So we garner, it's worth $1 billion of revenues to Boeing annually. Or, once China certifies the aircraft, it's about $24 per share that we assume Boeing will benefit. We estimate about half of that is in the stock. So we say it's $12 per share for Boeing once China certifies the MAX. We have about over 170 authorities that have certified the MAX already out of 195 entities globally.
Everybody tracking, the daily TSA numbers in terms of air traffic and trying to feed that through to some idea of what that means, either longer term or near term on, service side or demand for new aircraft. Does it matter at this point? I mean, we're still running below 2019 levels naturally.
I think we have several catalysts left to go. Domestic travel in China is back to 2019 levels. In the U.S., we're about 20% below that. So, we're yet to see domestic come back. International, as I mentioned, is down 70%. So there are several items to look forward to in terms of just the process. You've seen big orders come out of the U.S. airlines, the legacy carriers, as well as some of the low-cost carriers. So we're starting to see orders come back, particularly on the narrow-body side.
On the wide body, Sheila, we have seen some bullish notes from analysts who are trying to get ahead of what they believe will be a stair-step function higher in international and then a consequent demand for wide bodies. Are you going that far right now?
Well, we actually cover the airlines, too. So we upgraded Delta Airlines 2 weeks ago on the potential for international recovery to come back. We know it's going to come back. We think Europe is going to be the one to come back first, and Delta is most exposed to that, with half of its business that's international, so about a quarter of its sales to transatlantic to European travel. So we think that's going to come back much faster than Asia. However, we're seeing, starts and stops. The Delta variant is taking over in the UK a bit. Case count was 17,000 the last time I checked a day ago. So that is creeping up, and it's something to keep an eye out on. I'm not very bullish on wide body orders, though. We don't forecast. When you look at wide bodies, whether it's the 787 or the A350 from Airbus, we're forecasting them at about a 5 per month production rate through 2025. That compares to where they were pre-COVID at 10 to 14 a month. So we're forecasting that business is cut in half, and we don't foresee that coming back for the next 5 years.
Shepard Smith here. Thanks for watching CNBC on YouTube.